Live streamers and hedge fund managers are crashing out about their loss of wealth, and everybody is trying to figure out when exactly tariff palooza is going to come to an end. You see, I've gamed out how this tariff thing is going to go. It took me a second, but I think I have the right mental framework for exactly what we are experiencing right now. For the first time in months, I am confident on exactly my strategy that I'm going to be using to buy assets here in Q2 of 2025, which I'm going to go out and say right now marks the bottom of this entire market cycle. Just today, we've seen the biggest vibe shift in this entire tariff palooza insane market cycle that started the day President Trump came into office. And my friends, what I'm going to show you today is not only the right mentality for how we should be evaluating this, the exact right comparables to how we should be looking at the current event we're experiencing, but exactly when we should be ready to slam the buy button with the strength of Thor's hammer. Because as much as it pained me to flip bearish about a month or so ago, it is now exciting me to flip back bullish again, as I think we can finally see the bottom of the pool. First and foremost, let's just take a quick pulse on the insanity happening on the internet around this crushing bear market induced by Trump tariffs.
Like, what is going on in the world right now? Why the fuck is this going on? Can somebody please explain what's going on? Why are we all losing? Why are we all negative right now? Like, does anybody know why?
Does anybody know? Does anybody know why? Why is he poor? Yeah, Aiden Ross, who hopped on the crypto train right at the Pico Schmico Frico top. And this is him dancing to try to help get Trump elected. He was on the Trump train, and now he's having what feels like some buyer's remorse. Here we have Bill Ackman, one of the biggest hedge fund managers in the world, and he's calling out Secretary of Commerce Howard Lutnick, saying he's indifferent to the stock market and the economy crashing because he's long bonds. Him and Cantor Fitzgerald, they're long bonds. So they don't care about the crushing stock market collapse, even though we know he has $1 billion in Bitcoin. And you see Jason over here saying knives are out. Yeah, this is a crazy thing to be seeing happening publicly. This type of crash out happening publicly on Twitter from some of the biggest hedge fund managers in the world. People are panicking. And remember on yesterday's video, I told you, hey, look, the time to actually plan was before. Because if we came down here, I was saying, hey, look, I'm layering bids at 75, at 74, all the way down into these low 70s, because that's where this value zone was going to be. And I'm lucky enough to have gotten filled on several big Bitcoin buys. And here we are. You could see this level, this just above the prior all-time high. You like to see it get front run. You don't want to see it really reconnect and spend time down here. You really want to see it actually just have a spring effect like it did. And that, my friends, is showing you that there's strong buyer support. Now, of course, we knew there would be strong buyer support at this level. The question is what happens over the next few days and weeks. We have a sneak peek on exactly what we think is going to happen here. Check this out. But first and foremost, I wanted to talk about this particular move that we've had, because many are calling this the best Black Monday ever. And this is because, of course, there was a massive, massive bounce from the lows. But the bounce was created in large part by the US stock market reacting to a fake headline claiming that Trump was considering a pause on tariffs. But Trump very quickly came out and said they are not considering a pause on tariffs, and the stock market came right back down. This is trillions of dollars moving around like an absolute coin. And it leads you to ask a question. What is the right mentality for how you view this? Because it feels as though this market is ready to recover trillions of dollars in losses at the literal picosecond that Trump decides to pull this tariff thing off the table, and everyone thinks they have to do it. In fact, I'm going to prove to you why they have to do it today with some evidence in this episode. And once you understand that it is not possible to keep these tariffs active and achieve Trump's stated goals, you'll understand that the question is not if he pulls the tariffs off, but when. Exactly when. And we finally have a piece of information that I think gives us an idea exactly as to when. In summary, if it can rip 6% on a fake headline, imagine how much it can rip on a real headline. And that's why I think what we're experiencing is very much so COVID 2.0. This is the exact collapse that we saw during COVID, which if anyone took every spare cent they had and threw it at the markets at the lows of that COVID crash, you were a very rich person just a few months later. And I think that's exactly what we'll see here, because just like with COVID, a man-made virus here, we are now seeing a man-made tariff-induced, very quick and deep recession recession that's being caused by something that Trump can just wave his wand and fix as soon as he gets concessions from other countries. Just to show you these insane bounces across the board from Solana, which went into the double digits, Ethereum down under 1,500, SWI, Bitcoin, everything has just been absolutely collapsed. And it is insane how quickly it bounced. But the biggest thing that I want you to understand here is, unlike COVID, the Fed just can't sweep in and fix this. They came in with a sledgehammer of liquidity and rate cuts in 2020. They do not have the ability to do that now, and partly because the 10-year yields are way too high. In fact, today on Black Monday, which should have been a collapse in the markets, and it should have brought yields down, because as stocks go down, people sell them and they buy bonds, and that lowers the yield on the bonds. Well, effectively, the bond yield just went up, which a lot of people are thinking maybe it's China or Japan or some big sovereign selling their bonds and effectively raising the yield as a way to push back on Trump's tariffs, because we know that Trump wants this 10-year yield down. And if he doesn't get it down, he doesn't actually make life more affordable for the bottom 50% of Americans. He needs, throughout this whole economic collapse period that he's doing, he needs the 10-year to come down. And not only is the 10-year not coming down, but people are pricing in the actual realities of these tariffs as over 2.5% of added inflation, meaning that the actual inflation rate will be over 5% again, meaning inflation back and rates higher. That means that the Fed has nowhere to go. The Fed cannot lower rates in a 5% inflation environment, or else they will push inflation even higher. And so you're seeing the market tell Trump that this isn't working with tariffs on the board, because tariffs are fundamentally inflationary. Short-term tariffs to equalize trade is the new 2 weeks to flatten the curve, just for more COVID analogs. But I did think that this was a bit funny in that this isn't going to work, right? These short-term tariffs to equalize trade, this is a negotiation tactic, but it cannot stay in full effect. This is a fiction. Now, before we go further, I did want to reflect on how Trump really made it clear he didn't need to fire a single bullet to bring every country in the world, including our harshest adversaries like China, to their absolute knees. He has a non-violent chokehold on every single country, and as bad as things are in the United States, they are 10, 20, 30 times worse in other countries, because those countries simply can't print and stimulate their way out without causing rampant hyperinflation. They do not have the levers that we have to pull in the United States. And so you might be wondering, well, what's happening? Apparently, every country on earth has contacted Trump in response to these tariffs, including the EU. And the EU says they are ready to negotiate with the US. They've offered 0 for 0 on industrial goods and auto, and they're ready for a good deal. But they're also prepared to respond with countermeasures to defend their interests. And effectively, when asked about this, sitting next to Benjamin Netanyahu of Israel here, Trump says that no, he doesn't like this deal. The European Union has been very bad to us. They send millions of cars in a year. It's not going to be that way. And a reporter followed up saying, hey, look, they offered this 0 for 0 tariffs. Is that good enough? And Trump said, no, it's not. Now, gaming this out again, Trump's been having a wet dream about tariffs for years and years. He's not going to take them off the table. In fact, I believe they will go into effect, at least for a short period of time. And during that period of time, I believe we see a bottom on markets. Here's why. In the background, Trump knows and his team know that this will cripple American businesses. So they're already considering an exporter tax credit. Think of this as another term for a bailout, a financial balloon of support for exporters. So they know, hey, look, this is going to be hard for you guys, so we're going to try to give you guys something to help get you through there. Again, shows that they are not going to have an iron fist here, that they have a soft-handed approach in some ways. And we see here that China is not happy. They're actually starting to restrict exports on rare minerals. They're starting to do military drills outside of Taiwan. There is a limit here where these other countries will be forced to get violent if a deal isn't reached. And I think we all know that we don't want to see this dissemble into World War III. We just don't. Nobody does. Okay? So this might have been true a couple of days ago. Bob EllioTrades over here says there are no signs that the new administration is willing to scale back their tariff efforts. Typically, a near immediate 20% in equity markets would cause policymakers to rethink their actions, but the new admin has shown no indications of any give yet. That was true when he wrote this, but it's not true now. And that's because we've seen the first major shift in messaging today from Scott Bessent. I'm going to play you this clip because it's really critical.
Larry, I can tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. And Japan is a very important military ally. They're a very important economic ally. And the U.S. has a lot of history with them. So I would expect that Japan's going to get priority just because they came forward very quickly.
Okay, so take this clip where he said Japan is going to get priority. They came forward very quickly, even though we know a lot of countries are coming forward. But listen specifically to what Bessent said. It's going to be a very busy April, May, and maybe even into June. This is going to be wrapped up within Q2. Okay, Q2 is when this happens. And you can see the messaging control now is being taken back by Scott Bessent. Treasury Secretary Scott Bessent flew to Florida Sunday to encourage President Donald Trump to focus his message on negotiating favorable trade deals or risk the stock market cratering even further, according to two people familiar with the conversations, granted anonymity to share the details of them. Bessent told Trump that markets would remain in peril unless he started putting more emphasis on talking about his endgame with tariffs, winning deals with other countries. So there you have it. Bessent grabbing the reins, realizing the damage was starting to get out of control and putting a very clear set of parameters on this equation. We're trying to negotiate better deals. That's it. The tariffs are a negotiating stick and they are trying to beat back what they see as their adversaries, but that's not the end goal. The tariffs are not the end goal, and that's what we needed to know as a market. Now, the question is, will they go into effect? Will we get to see tariffs? I believe so. I believe we will see an era of tariffs, and that will be most likely the bottom. Now, the key here is to understand, did we already see the bottom? Was that the low? It might have been. But if we start to revisit these low 70s, as we start to explore, hopefully, these lows again, because I really do want to keep buying around these areas. I'm not fully in yet. I want to be very aware that tariffs could send us in that last leg lower, but in the end, that we are going to see the lows throughout April and May. And once we start getting towards the end of Q2, I believe the market, if it's not already picking up, will pick up aggressively. And I want to be fully allocated by the end of May, maybe sooner. But it really just depends on how we see the sort of interaction between other nations and the United States, the actual trade deals that get inked over the next few days and weeks, and understanding that there is an end to this process in sight. This was a man-made disaster, and I believe we will see a COVID-like recovery, which will be swift, aggressive, and glorious. The sentiment was also echoed by the head of risk at Goldman Sachs, Josh Schifrin. He said, "I've been negative, but now I'm bullish. Time to start scaling in." I completely agree. Okay, so where are we buying here? Well, like I said, anything under this 76,000, this is your huge value zone that if I think we will get down to explore that again, I think you're going to have another chance down there. That is the biggest value zone. Obviously, it's not terrible where we are right now. You're still, in this middle zone, but I don't love these ranges. I think you're going to get much more value down here below 76, but obviously anything under the prior all-time high, and I do think it's possible we revisit under those prior all-time highs without violating this bullish thesis. Obviously, it could go down here to, this 50K range. I think that this is a bit of a pipe dream. I don't think that this is going to happen. I think this is just too bearish. But anything in this sort of 2 range, which is these high 60s, low 70s, that is the prior all-time high range, which will make people wonder, have we fully given it up? Are we going to go all the way back down to 30s? You'll have these crazy bear targets that will come into to play. And to me, this is the time to load up. Anything under the prior all-time high, that's like back when we were under 20K on the last cycle. That's what we're looking at here. And there's just so many positive things lining up for crypto and Bitcoin. I just can't see this being anything other than an amazing range. Another thing I'm looking at that's actually been so brutalized is Coinbase stock. This one to me is going to be a phenomenal buy zone between 115 and 147. As close as I can get to that 115, I think we're going to, you can see it's even below this 147 support that it bounced off of in September. And I think that this zone, specifically anything close to 115, is an absolutely insane entry. I'm going to be loading myself to the gills on CoinStock if we get down here, because I think it'll run back up faster than Bitcoin, almost over a 3x to the highs from that, over 3x to the highs. Crazy. Great R&R on a blue chip stock. Solana, what can I say except this is what dreams are made of. Under 100, right? Under 100, we get absolutely insane value. Again, I'm not saying that it needs to go under there. We did see it bounce ever so slightly under there this morning. Again, I think what we want to see is when tariffs go into effect, what's the scare tactic? What's the actual market reaction? Because there's a possibility that we've seen already the pricing in of all these things. The fear has hit, the capitulation has hit, and that now it's a recovery process. And as these things go into effect, the lows have already been established and we actually don't go all the way back down there. That's the constructive behavior that we want to see over the next few weeks. And specifically before the end of May, I'm trying to be fully allocated to this market, like I said. And that means buying like crazy things like Solana, things like Ethereum, things like Bitcoin, things like your favorite altcoins. Again, we have some massive news coming for Super, which we'll be announcing here in just the next few days. Stuff I don't think any of you guys will have any idea it's coming because I've never told anyone about it. And I also will be telling you there's some coins that may seem crazy, but I'm going to be buying at the lows as well. I actually have a whole shopping list, and I think you should as well. Because if we make this turn, and if the turn comes in tandem with looser monetary policy, if they withdraw the tariffs and it brings inflation expectations back down, along with having reset rates, those types of things can be extremely impactful. And I think that that's what Trump's trying to do. I think the trade negotiation is going to involve other countries buying our long-term debt, which lowers rates, will bring down the cost of living, but they need to do it without inflation, which means that Trump needs to remove these tariffs, renegotiate these trade deals, and then we can have a very long, sustained, healthy bull run. And in a healthy, long sustained bull run, I think that everything we saw happen at the beginning of the year will happen to an even exaggerated, more extreme effect later in the cycle, later in this year as an extension of that cycle. And I don't think it's going to necessarily have to end in 2026. Another one, hyperliquid. If I can get hyperliquid in the single digits, oof, that's going to be phenomenal. Phenomenal buy for hype. And look at AVAX coming almost down to its bear market lows. Absolute insanity that it's been giving up this much value. But you can see here that as projects, and especially multi-cycle alts with tons of tech, tons of things going for it, coming down to these types of lows, I mean, buying AVAX in the single digits, it might happen here. I mean, I hope it doesn't, but it might come down all the way to these lows. It's not too far off. So like anything in this area is extreme value territory for things like AVAX. Sonic, I'll be looking to get some S. Yeah, if we come down here and we break anywhere below here, you could see some capitulation down into the 30-cent range. That would be a phenomenal opportunity. All right, that's it. You get it. The point is that Q2 is for buying. There's been a huge vibe shift. Trump is getting pressure from everyone around him to knock this off. And the simple mathematics don't allow for the Fed to make things any better. They cannot cut rates. They cannot stimulate unless Trump removes the tariffs, because the tariffs are too inflationary. And the Fed cutting or stimulating would be inflationary. And they cannot afford to go back to an inflationary regime. So what has to happen is a grand renegotiation. Then the tariffs need to be fully pulled or almost entirely pulled. Then we go back to business as usual with way less inflation, lower rates, and crypto can finally slip into its golden era. Do not get distracted. Do not lose the forest through the trees. I'm very happy I have some cash on the side right now, because if I didn't sell in the upper 80s, low 90s, if I didn't take some SOL off the table around 200, if I didn't do these things, then I wouldn't have the cash available. And I know it was not popular. I know everyone hated it on this channel, but those are the moves that you need to make, unpopular or not. And I'm going to be doing my best to just deliver good content, to just help beat the markets. And I feel like we did an incredible trade over the last few months. Even though we lost the first part of the year, we're going to absolutely crush it here through the end of the year and long into the future. As always, if you enjoyed this one, make sure to click on this video. It's popping up right now, and I'll see you very soon on the next episode.